All right. Hey, everybody, Economic Ninja here. I hope you're doing great. Want to talk about the inflation data that just came out. It's fallen all across the board. And I'm going to talk about what nobody is considering. But first, there's two things happening right now. Because last time during the dot-com, well, not dot-com bubble, the recession, the Great Recession, we had houses falling, we had stock market falling. What we didn't have back then was inflation like we do now. This is a very serious time in our economy. We had inflation back then. In 2007, 2008, we saw gas prices rising all-time highs back then. We saw some prices exploding. That's a wrong word. Going up, but nothing like we have seen in the last 2 years, 2.5, maybe 3 years. We did not have supply chain stoppages and all this stuff going in and out, right? We have the world, the Wall Street, the world actually is expecting the Fed to lower rates. Yet Jerome Powell and all these governors coming out going, where did we say that? Yeah, we penciled in 3. And I told you that was a fake out. But I want people to understand that we have so many things stacked against the economy right now as compared to what happened between 2006 and 2008. Oh, by the way, we're already going through a banking crash. The FDIC says they're tapped. They, they admitted on leaked tapes that they didn't want the public to know the banking sector was crashing because they didn't want to have a panic. We have never seen, all throughout the Great Recession and the dot-com bubble, M2 money supply shrinking like it is right now. There are so many things against the markets. And this is what else is really interesting. And we're going to get to this inflation data because it's falling. Gold's trading almost at $2,100. It's like $2,079 right now because they're all expecting a rate cut. Okay, but people need to understand that inflation is still up. All right, I did a story the other day on was it a Real Estate Ninja? This got so little views, and it's starting to really make me think. The whole nation, Wall Street, is just begging you to buy a house, even though sales are collapsing, prices are dropping. And I started doing videos about Freddie Mac being in trouble, going say, hey, we need to start doing an inquiry because we think we bought a bunch of loans that were not up to snuff with government standards. Exactly what happened during the mortgage-backed security crisis of 2005, 2006. I did this story on Freddie Mac saying that they just came out, their Freddie Mac index falls across all markets, and it got some of the lowest views I've ever gotten. Now, received. I'm starting to think all these real estate videos, I'm one of the only people out there talking about a real estate crash. And there's a handful of people out there on the internet talking about this, but I'm almost starting to think that the algo's not wanting to share this stuff because they want that eternal optimism. They want you to keep buying, because if the music stops, then the band's drowned, right? Just like on the Titanic. So let's jump into this story about, if you want to go check that out, please go check it out on Real Estate Ninja. I did it yesterday. It's entitled Freddie Mac Investment Index Falls Across All Markets. And they're talking about large multifamily properties. They're saying not only are rents falling, the interest rates are high, we all know that, but property values are falling on these large properties. That's another big key indicator of a real estate crash. So let's dive into this story. And if you guys want the course, 80% off, how to prepare for the next real estate crash, it's down below. I'll put it down in the comment section when this video is done. Here we go. So it's out of Zero Hedge. Government wage growth hits record high as Fed's favorite inflation indicator tumbles. And this is the headlines on CNBC too, that inflation came down, it's crashing down. It's not. One of the Fed's favorite inflation indicators, which is the core PCE deflator, tumbled to a positive 3.2%. So when it says it tumbled, it's still positive. We still have positive 3.2% inflation, which I do not believe is correct anyway, because the government lies to us. Just try and go to the grocery store. But this is year over year, okay, which was below the 3.3% expected and down from a downwardly revised 3.4% in October. This is the lowest since April of 2021. Headline CPI also slowed more than expected to 2.6% year over year in November from a positive 2.9% in October. So first off, everyone's expecting, the whole world's expecting the Fed to lower rates. And I've said this before, I'm going to say it again. The Fed never lowers rates unless really bad things are happening. Real estate's crashing and stock market's crashing. That's really the only reason they've ever lowered rates, unless you're in 2018 and the president has the guts to go against the Fed and is screaming that the Fed's trying to crash the market by raising rates. And they do an abrupt about face. So they've never lowered unless things go bad, right? Okay. So we still have positive inflation well above the Fed's 2% target. We're at 3.2% for core CPI, or sorry, core PCE. What makes you think that the Fed is going to lower rates? Please put it down below and let me know, because I do not see it coming. All right? Unless our federal government pressures the Fed, because they said, we'll just replace you. We'll replace, not with the new Fed, but like, replace Jerome Powell, because they want more votes and they want to be able to put off this illusion. Okay? But without a crashing stock market, a crashing housing market, and we have the housing market going down and the stock market's going up, which is throwing a lot of people off. But this is always what happens in every country when they experience inflation. Heavy inflation to hyperinflation, stock markets always rise, but they never rise alongside at the same value of food and energy. When you pull back and you look at the big picture, these are a bunch of people racing in, and I truly believe the day that it's too late, it's going to be too late. This is perfect Wall Street psychology chart work right now in action. Now it says the headline PCE deflator fell 0.1% month over month. This is the first monthly decline since April of 2020. So people are cheering this. The drop was all driven by goods, durable and non-durable. Now, I want to remind you, when inflation drops, it's because people aren't buying things, right? So sellers of goods or services, goods and services, they lower their prices. That's what brings it down. Okay, remember, there are layoffs like crazy, which are also bolstering stock prices, right? Companies are saying we're not selling enough stuff. We have to fire people. So they go, yeah, let's buy the stock because that means more profit. You're still dealing with less sales, okay? Whichever way you cut it, and people are going, yeah, but if there's less employees, there are going to be more profits. Yeah, until all of a sudden orders start up again, and then, or you've laid off too many people and you have this bullwhip effect, this whiplash effect, and you can't now come out with the products, all right? Just in the news the other day, we saw that containers for a 40-foot container have jumped in the last week or two from $2,400 to $10,000. And there's delays in shipments around the world right now because of what's going on in the Red Sea. Okay? People are not paying attention to the underlying facts. They're dreaming. This is hopium. It says on a 6-month basis, they said the mission was accomplished by the Fed because they show this chart that shows, look, inflation, it was up here and now it's dropping, right? That green line is the Fed's rate where they want to get to. And you think that's really close, but it really isn't. It says here, even more focus is the Fed's view on service inflation ex shelter. So minus shelter, homes, where you live. And the PCE equivalent shows that it has broken down from its sticky levels to the lowest since March of 2021. Year over year, goods deflation continued for the 6th month in a row. So people on the internet are completely cheering this. If you go to CNBC right now as we're doing this, the Dow Jones is up like 100 points, right? Gold, like I said, up to $2,081. Silver's making a nice run too. But the problem is, and bonds should be down. Yep, bonds are down today. The 10-year bond's down. So everyone's super excited. We have to remember, the BRICS are splitting away from the world, and they're doing it fast. Inflation is still positive. It's way above. It's at 3.2%, where the Fed wants it to be at 2%. We have a lot of stuff going on. We've got layoffs happening like crazy. I do not see a world in which this turns around super quick. So I think it's important for people to be ready. If you want to be ready and you want to get ready for this real estate crash, Freddie Mac's already came out and said, big multifamilies dropping all across the country. Anywhere in the country, you could see price drops The only thing on real estate, the only thing that's going up are the cheapest homes, and they're selling so few of them. That's what throws people off. They go, oh, my neighbor sold his house really quick. You're like, what's really quick now? Oh, it was like 30 days. It was like 45 days. You remember when it was less than like 4 days homes were selling for? It's a totally different market right now. And your neighbor was the only one that sold his house in the last 4 months on his block. And the reason why is because nobody can afford to sell, and your neighbor's either losing his job or he's going to move out of state. People need to realize this. This is so much bigger of an opportunity than in 2008. But the problem was the opportunity happened in 2006. So it happened 2 years before the crash. So are you going to get ready now, or are you going to sit on the sidelines and wait? So if you want, I'll throw some more 80% off links. I haven't put them on this video yet. I'll put them on right after I hang up. But if you want, that course will be $199 until, and there's a few links when it's out. If they're not $199, it's not for sale anymore, but it's good until January 1st. January 1st, the course goes up 10 times. All right, I hope you have a great day. I wanted to say Real Estate Ninja. Go and check out that video by the Real Estate Ninja. I'm not joking. The one on Freddie Mac. It's important to watch because they're not getting shared, and I think they're not getting shared for a reason. The cool news is, in a year from now, let's see where this all lays. All right, with that being said, the Economic Ninja is out.